Hi everyone, welcome back to Saheb Academy. Today we are going to discuss this final account adjustment which is called as provision for discount on debtors. We are going to understand the concept, the accounting treatment of it, and also we are going to take some problems with this adjustment and see how you have to tackle and solve this adjustment, okay, so that you can have the complete clarity. And let me tell you that this adjustment, right, provision for discount on debtors is completely same like provision for doubtful debts. Okay, the same way you have to solve, the same concept is there, everything is same. So that is why we are gonna go quickly over here, okay, and just see whatever that is important, because all the logics and everything have been explained very deeply in the previous two videos of provision for doubtful debts. Okay, so please make sure you have watched those two videos and you know a little bit about this provision for doubtful debts, okay, because it's completely related also, it's completely related. Fine, so now let's start this video and let's understand this. Now see here, first let's understand which discount are we talking about over here. It's really simple. See here, I told you provision for discount on debtors. Discount on debtors means discount allowed. Okay, you all know there are two sorts of discount in the business. We have discount allowed and discount received. Discount received is an income because it's a discount which we receive from our supplier, from our creditor, and we have to pay less. So that discount received is an income and it will go on the credit side of P&L, okay, profit and loss. Whereas discount allowed is a discount which we give to our customers. So this is a loss for us, an expense for us. So this discount allowed is supposed to go on the debit side of profit and loss because it's an expense, it's a loss. All right. Now you can also further classify this discount allowed, but actually we don't do that. See here, we have trade discount and cash discount. Okay, trade discount means the discount which you give immediately to your customer. For example, a customer came to your shop, he saw some product, he picked it up. Let's just say, for example, the price was 1000. Okay, the list price was 1000, but that price has been cut off in the tag and below that 900 is written. So now that customer will pay you 900, right? So now the difference, right, that 100, the difference between the list price and the actual payment price is called as the trade discount, the discount which is given immediately. Now this discount is never recorded in accounting. Trade discount is never recorded in accounting. It is just deducted. 1000 minus 100, 900. So 900 that customer has to pay me. Okay, that's what happens in the accounting. 900 will be recorded as the sales value, and 100 will be deducted. So that 100 will never be recorded anywhere as an expense or income. Fine. Okay, then what can happen is, let's just say, for example, that customer didn't pay you 900. He told you he will pay 900 after 10 days. Okay, after 10 days. So now you couldn't wait till 10 days. In between the time period, in between the credit period, let's just say after 5 days, you call the customer and you told him, see, Mr. X, please pay me my 900 back. Now that customer will say, for example, he says that I don't have 900, I just have, let's just say, 850. I just have 850. So now you will say, okay, fine, just give me 850 and let's just settle it. Okay, let's just settle it. You don't have to pay me the remaining 50. Just pay me 850 and the account is over. So you were supposed to receive 900, but you are actually getting only 850. Yeah, you want early payment. Because of early payment, what you have to do as a business owner or as a salesman, you have to give a discount, and that discount of 50 rupees over here, that 50 rupees which you are not going to get, that is called as cash discount. The discount which is given to credit customers for early payment, right? The credit period was of 10 days, but you wanted money earlier, within 5 days only. You call the customer and you were ready to give him a little bit discount, that 50 rupees. So that is called as cash discount, and this is a loss to the business. But why does the business does that? Because to get that 850 immediately, okay, for early payment, right? So the discount which is given to credit customers for early payment is called as discount allowed, or you can also call it as cash discount, right? But whenever anyone says, or whenever you read anywhere that discount allowed is given, then you have to understand they are talking about cash discount. Okay, trade discount is never discount allowed. Okay, it's just not recorded, it's irrelevant. Trade discount, fine. Okay, so cash discount, it's an expense, it's a loss. Okay, and if the provision for discount is not maintained in the business, then what will you do? How will you treat this? It's really simple. How do you treat an expense? You just take it to debit side of profit and loss account. It's an expense now. It will go on to the debit side of profit and loss. What would be the entry? The entry would be profit and loss account debit to discount allowed. Okay, this is the writing of entry I'm talking about. The first recording will be happening differently. The first recording will be what? The first recording will be this. See here, discount allowed account debit. You will record the loss, you will record the expense, and you will reduce the debtors. Yeah, you will reduce the debtors, because understand, you is supposed to receive 900, you receive only 850, so that 50 rupees you are not going to receive. So with that 50, you have to reduce the debtors. Discount allowed account debit to debtors account 50. Okay, here 50 will be there, and discount allowed also 50 will be there. Okay, but if the whole entry you're talking about, then the whole entry will be like this. For example, the compound entry will be like this. See, you have received cash of how much? You have received cash of 900. Was it 900? No, sorry, you have received only 850, right? So 850 you have received, the remaining 50 you have not received, so it's a loss. So that will be discount allowed, and then the debtors will be reduced. The debtors will be reduced by the entire amount, that is 900. So you understand, this will be the compound entry. Okay, normally. And then if the provision is not maintained, then this account has to be written off. This account has to be written off. So that is why to write it off, what you have to do, you have to debit the profit and loss account debit to discount allowed. Okay, this is what you need to do. If the provision is not maintained, 50-50. So with this entry, what happened? That discount allowed account is closed. That discount allowed account is closed. Here it was debited, and then here it was credited with the equal amount. So that discount allowed account is completely finished. Okay, these are the two entries you pass. Fine, simple. Okay, so this is the treatment when provision is not maintained. So now we have to understand what we are going to do about this if provision is maintained. The same sort of concept like provision for doubtful debts. First, let's understand a little bit about what is provision. Now, provision is really simple. Let's understand this provision with the help of a basic example. Let's just say you're in the first year of the business and you have made lots of credit sales, okay? And you're expecting that you have some estimation in your mind that in the next year, in the second year of my business, I will have to give lots of discount to get early payments from my customers, from my credit customers, from my debtors, okay? So that is an expense. You all know that, right? So in the year one only, you are expecting that in the year two, I will have to incur these losses. Okay, maybe not 100% true. Maybe you have an estimation here in your mind, right? So that estimation, that estimated loss is called in accounting as anticipated loss. You have anticipated some loss that may happen in future, right? So the conservatism principle says record that right now in the accounting books, give the effect, little bit effect of that in the in the current year itself. So that is what we do with the provision. Yeah, what we do in provision is we record anticipated loss by debiting profit and loss account. Okay, and not just that, we also create a special account called as provision for discount account. Provision for discount account. The same sort of concept is there over here. Same like what we have done in provision for doubtful debts. Yeah, in the year when we were expecting that bad debts may happen, so that is why we are recording the loss right now only, and we are creating a special account called as provision for doubtful debts account, right? Similarly here, we are expecting that in the next year we'll have lots of discount allowed, so we are recording that loss right now only, and we are creating a special account called as provision for discount for debtors or provision for discount allowed account. Okay, you can call different names, it doesn't matter. Creating special account called as provision for discount account to write off the loss if it actually happens in the next year. If there is actually discount allowed happening in the next year, then that discount allowed will not be written off through profit and loss. No, it will be written off through this provision for discount account, yeah, to write off the loss if it actually happens the next year. So let's just see the journal entry that you will pass in the first year to create the provision. See, it's really simple. Accounting treatment in the first year. Anticipated loss you have to record. Two things are there. Understand, anticipated loss you have to record, which you will record by debiting profit and loss account, and you have to create a special provision account, which will have a credit balance. Credit balance means what? Credit balance means whenever it increases you have to credit, whenever it decreases you have to debit, right? That's what credit balance means. So you will have to credit the provision for discount account. See the journal entry over here. Profit and loss account debit. Profits are decreasing because you are debiting the profit and loss account. Whenever profit decreases, what you have to do? Whenever profit decreases, you have to debit, right? So that's the rule. Okay. And to provision for discount. This is a contra asset account. Understand, this provision for discount account now, it will act against your receivable balance, or you can say the debtors balance. That is why it's called as contra asset account. It's against the asset. Okay, it will be having credit balance, so that is why to increase it you will have to credit it. Fine. Anticipated loss is recorded by debiting profit and loss, and special account is created, contra asset account, called as provision for discount, by crediting it. Fine. Simple. This entry you will pass. So now what has happened? Yeah, see the effect of this in the first year financial statement. In the first year financial statement, in profit and loss account, on the debit side, the posting has gone to provision for discount account. Is that clear? Simple and straightforward. And then what will happen? In the balance sheet, what is the effect in balance sheet in the first year? In the balance sheet, in the debtors balance, for example, let's just say your debtors balance is 1 lakh. So from 1 lakh you will deduct further bad debts if there are any. If there is any provision for bad debt, then that will also you will deduct. After that, whatever amount is there, from that you will deduct this also. Just presentation. It's just presentation. Okay, let's just say 95,000 is there. From that 95,000, let's just say provision for discount is 1,000. So 95,000 minus 1,000, 94,000 will be shown in the outer column of the balance sheet. Is that clear? That is what you will do in the first year. Come to the second year. What will happen in the second year? Let's just say in the second year, the discount allowed happened. Okay. So see here, discount allowed happened. So what's the journal entry for recording the discount allowed? It's really simple. There is a compound entry for that. I just showed you now previously. Yeah, that sort of entry will be passed. But if you're just talking about the discount allowed, then the entry is like this: discount allowed account debit. You're debiting the discount allowed because it's an expense. To record the expense, what do? You debit, right? So discount allowed account debit, it's a loss. So you have to debit and record it. And then you will decrease the debtors account. Let's just say 50-50. Okay, 50 rupees to debtors account. Okay. And then what will happen? And then you have to write off this loss. If provision was not maintained, then we could have debited the profit and loss to discount allowed. But since provision is maintained in the business, provision for discount account is maintained, and we know we create this special account, provision for discount account, to write off the loss if it actually happens in the next year. So that is why we will use that over here. See here, provision for discount account debit to discount allowed. The same sort of concept, right? The same concept. Okay, the same entry we will pass. In doubtful debts, it used to be what? Provision for doubtful debts account debit to bad debts, right? Here what is there? Just the bad debt is replaced by discount allowed. See here, provision for discount account debit to discount allowed. Fine. So here discount allowed was debited, loss was recorded, and now that loss has been written off to provision to discount allowed credit. Okay, is that clear? Fine. After this, what will happen? After this, you will have to prepare the ledger account of provision for discount, and you will have to find out the balancing figure. The question will say you in the adjustment that you have to maintain 2% provision for discount. So in that scenario, you will have to create you have to put additional amount in the provision for discount. So this entry you will pass. What is the effect of provision for discount in the profit and loss? You might have to create the provision or maybe reverse the provision. If you have to reverse, then reverse entry of this you will pass. Provision for discount account debit to profit and loss account. If you have to create additional provision, more amount you have to put in the provision, then you will pass this entry, profit and loss account debit to provision for discount account. The same concept what we have seen now, the same concept. Okay, right. So these were the journal entries that you have to pass. Now let's just see the ledger account and its effect, right? See here we have the ledger accounts and profit and loss account and the balance sheet, and also the shortcut over here. So here I just want to make you understand little bit the difference that is there between this provision, treatment and the provision for doubtful debts. Okay, so see, it's really simple. First, let's just talk about this discount allowed ledger account. This is same like bad debts account, no difference at all. Let me just show you how it is same. See here, discount allowed is an expense account, right? Same like bad debts. Okay, so opening balance will be on the debit side. If there is any discount allowed given in the trial balance, then it will come over here to balance B by D, amount given in trial balance. Clear? Simple. If there are any further discount allowed in adjustment, then that will come over here, same like bad debts. Okay, discount allowed is debited because of debtors, right? Because of debtors. Fine. And then what do we do of this expense? We have to write off. Always all the expenses are written off. Yeah, they get close to profit and loss account. But since provision is maintained, we will write off the discount allowed through provision. You saw the journal entry, right? You saw the journal entry. See here, provision for discount account debit to discount allowed. Discount allowed is getting credited. Discount allowed is getting credited because of provision. Fine. Simple. Discount allowed is really simple. The account is same like bad debts, the same treatment we saw. And then come to the debtors account, the receivables account, which has a debit balance. It's an asset, right? So opening balance on the debit side and closing balance on the credit side. Closing balance will be found out as a balancing figure. Okay. So now here, what will happen? The cross posting from discount allowed will come, right? Debtors, right? By discount allowed. Two debtors by discount. The cross posting, debtors have decreased because of discount allowed. We didn't receive the money now, so of course debtors are reduced. And then let's just say, for example, in the question there are also bad debts given. Mostly they will give bad debts also. So if there are any further bad debts, then it will come over here by bad debts, right? Isn't it? Now this was also what? Further discount allowed. This was also further bad debts, right? If there are any further bad debts, the bad debts given in adjustment, then it will come over here. Debtors are reducing because of bad debts. Fine, simple. And then as a balancing figure, you will find out the closing balance. So debtors account is finished, really simple. And then provision for discount. Now in provision for discount, you have to understand it's completely same what you have seen to what you have seen in the provision for doubtful debts. See, provision for discount account is also a contra asset account. It has credit balance, opening balance on the credit side and closing balance on the debit side. Opening balance you will get from trial balance, right? Amount given in trial balance, yeah, whatever provision they maintained from the previous year, that you will take over here, okay, over here. And then whatever discount allowed has happened, adjustment also, trial balance also, both adjustment also, trial balance also will come over here, okay. Provision for discount account is decreasing because of discount allowed. Okay, it's what do you say, cross posting over here. Let's just say 500 was there, 500 trial balance discount allowed, 500 adjustment discount allowed. So both of this is 1000. So 1000 will come over here. So that 1000 will flow over here, cross posting to discount allowed, 1000. Okay, like that you will take. And then the closing balance you have to calculate. Okay, closing balance, the question will tell you how you have to calculate, 2%, 3%, they will say. So you will have to calculate this on the new debtors balance, the debtors balance after deducting the bad debts and after deducting the provision. Okay, they will tell you. Fine. And then as a balancing figure, you will find this figure by profit and loss. This will be the balancing figure. Mostly 99% of the time, this will be your balancing figure. Okay, so this will be your balancing figure, and always prepare this. Okay, this is a really good working note for you, because with this you will be able to understand how much amount will hit the profit and loss account. Okay, so let's just say here 500 is coming, so that's 500 will come over here to provision for discount allowed, 500. Now it can also happen that this profit and loss can also come over here. You might have to reverse the provision. If you have to reverse the provision, then the cross posting will go on the other side by provision for discount allowed. Okay, on the income side. Is that clear? So both of the situation can happen, right? Now to find this out, to find this amount, right, how much will affect the profit and loss, you have a shortcut also, and you can prepare this, or you can prepare this account also, right? Most of the students prefer the shortcut. What is the shortcut? Really simple. The shortcut is new provision, whatever new provision you have to maintain. Okay, this thing you can calculate, you will have to calculate new provision plus expense of the current year. What is expense of the current year? Discount allowed, which has happened. The discount allowed given in trial balance, as well as discount allowed in the adjustment, if there is any. Okay, mostly there will not be, but if there is any, then you will add that. Okay, 1000, let's just say for example, new provision you have to maintain is 1000, plus expense of current year is 500, again 1000. Okay, 1000 plus 1000, that's 2000, minus old provisions. Let's just say old provision was 300. So now 2000 minus 300, that's equal to 1700. So 1700 will come over here like that, but amount will be same. Okay, here with this way also the amount will be same. If here it's 500, here also it will be 500. If it's here 1700, here also 1700. Okay, the same thing. So that much amount you will debit to profit and loss. If this is positive, you will debit to profit and loss. If this is negative, then you will credit to profit and loss. Is that clear? Simple. And then in balance sheet, now here there is a difference. Entire whatever we saw previously, now everything was same. Just in the balance sheet there is little bit difference. In the balance sheet, what you will do, see here, debtors balance you will take less further bad debt. This debtors balance is from the trial balance. From the trial balance you will take, let's just say in trial balance 1 lakh is given. So from that 1 lakh you will subtract further bad debts. As you all know, we subtract over here the bad debts given in adjustment, because the complete accounting of that is not done. So we have to deduct over here, right, further bad debts. And then on this balance, after deducting the further bad debt, on this we calculate PDD. On this amount we calculate PDD, right? Yes. So you will deduct the PDD from that. Okay, you will deduct the PDD. Then after deducting the PDD, whatever amount you get, you calculate provision for discount. After deleting that, after removing PDD, whatever amount is left, on that you calculate provision for discount, okay, on the good debtors, and then you will show it as a deduction over here and then take the amount outside. This is the only difference. After PDD, always after PDD you have to do the provision for discount. Remember that provision for discount must be calculated on the amount of debtors receivables after deducting the provision for doubtful debts, PDD, provision for doubtful debts. This is the main difference. Rest everything is completely same. There is no difference at all. Okay, the shortcut, this thing, everything is same. Fine. Just this part you have to remember. This is only the difference there is. Okay. So now let's just see some examples directly from the tab, and then we will finish off the video. Okay. Now see here we have this question from the CMA study material, illustration 6. So let's read the question. See here, debtors as per trial balance 31,000. Okay, and then they have given us adjustment provide 1,000 for bad debts. Okay, these are further bad debts because they are given in adjustment. So accounting of this is not done. You have to deduct this from the debtors balance. Yeah, you know that you have to do the accounting of that. Nothing is done regarding that further bad debts. You have just found out. Okay, create 5% provision for bad debts and 2% provision for discount on debtors. So you have to create the provision, both the provisions for doubtful debts also and for the discount also. Fine. What's the requirement of the question? Pass journal entry for provision for discount on debtors and show how will it appear in the balance sheet. Okay, we'll do everything and see. So see, it's really simple. First, you have to understand what is the scenario. The scenario is this. In the question, the trial balance, only debtors balance is there. There is no bad debts, there is no discount, there are no provision maintained from previous years, nothing. Just the debtors balance is given in the trial balance. In adjustment, you have bad debts, which are what? Further bad debts, right? You can say these are further bad debts, right? And then create 5% provision for doubtful debts, create 2% provision for discount on debtors. Now, can you calculate this 5%, 2% on this amount? Of course not. Are you stupid? No, you cannot do that. First, you have to take this debtors balance. From this debtors balance, you have to deduct this bad debts because the accounting of this is not done. Yeah, you have to deduct this. And then whatever amount you will get, you will calculate 5% on that. Then deduct the 5% also. Yeah, and then whatever amount you will get, you will calculate 2%. And then deduct that 2% also, you will get the amount that you have to take in the balance sheet. Let's see how this will happen practically. It's really simple. See here, take this 31,000. Okay, debtors balance as per trial balance. From this, deduct the further bad debts because further bad debts are not accounted for. You will have to do the accounting right now. So 31,000 minus 1,000, that's equal to 30,000 total debtors. 30,000 are total debtors. Okay. So now on this 30,000, you will have to calculate. Understand? On this 30,000, you will have to calculate what? 30,000 into 5% because 30,000 are your what? Total debtors. So on total debtors, we calculate the provision. Okay, provision for doubtful debt, I mean, not discount. 30,000 into 0.05. So that's equal to 1,500. This is the provision for doubtful debt. 30,000 minus 1,500. You know now, in balance sheet, we present it like this. 30,000 minus 1,500. Okay, clear. Easy. After deducting the PDD, provision for doubtful debt, or you can say provision for bad debt, after deducting that, you will get 28,500. See, 30,000 minus 1,500, that's equal to 28,500. Now on this 28,500, you will have to calculate the provision for discount. Why is that so? Understand, I told you that provision is always calculated, provision for discount is always calculated on the amount of debtors after deducting the provision for doubtful debts. After deducting the provision for doubtful debts. So after deducting the provision for doubtful debts, the amount is 28,500. So on this we will calculate 0. How much? It's 2% now, 0.02. So that's equal to 570. So 570 is the provision for discount. Is that clear? 28,500 minus 570, that's equal to 28,500 minus 570, that's equal to 27,930. Simple. The same thing they have done over here. Okay, the same thing they have done. Is that clear? So they have asked us the journal entry for what? For only for the discount on debtors, right? So the journal entry will be this. See here, profit and loss account debit to provision for discount on debtors. Okay, this is the first year you are creating the provision. There was no provision earlier. Okay, this is the first time you are creating the provision. So what will be the entry? The entry will be this. What entry will be there? The entry will be this: profit and loss account debit to provision for discount on debtors. Anticipated loss is recorded and contra asset account is recorded also, which has a credit balance, and then later in the next year it will be used to write off the actual discount allowed if it actually happens. Okay, so that's the concept, right? So this is the journal entry, and then how it will be presented in the balance sheet. See, this is how it will be presented in the balance sheet. The same rough calculation. Okay, the debtors according to trial balance minus further bad debts, we got 30,000. These are our total debtors. Understand, these are our total debtors. From total debtors we calculated, okay, the 5% provision for bad debts. Now we calculate on this, we subtracted that, then we got good debtors, right? We got good debtors. On good debtors we calculated the discount provision, we subtracted that, and we got the fair proper value of the debtors. Yeah, that is 27,930. Simple, easy. Now see, you can also prepare the provision for discount account. Okay, but it's not required over here because there is not much calculation over here, isn't it? There is nothing discount allowed, nothing is given, no provision is also there from the previous years, right? So there is nothing over here. That is why this ledger account is not required. Okay. But if there is old provision and all, then the calculation becomes a little bit complicated. So the preparing of ledger account helps. Easily you can get how much amount will be taken to profit and loss. So let's see that. How much amount will be taken to profit and loss? You can just see the journal entry over here, that is 570. We just did the calculation now. There was no provision from earlier years. Just this much only we have to create now, 570. So immediately you can understand just 570 will affect the profit and loss. In the profit and loss account, on the debit side, you will take to provision for discount 570. Okay, but if there were old provision, discount allowed, yeah, it becomes a little bit complicated. In that scenario, what happens? You have to create this account. You have to create this account, okay, and take the balancing figure. It becomes easier that way. All right, and then bad debt also happened now, that will also come on the debit side, and then provision for doubtful debt was also supposed to be maintained. I mean, you have to create first time. So how much was that? That was 1,500. So that 1,500 will come over here also. To provision for doubtful debt, 1,500. Now understand, the provisions were created first time over here. That is why directly we could write the amount over here, 1,500, 570 as we calculated. But in the question, in the actual full-fledged question, what will happen? The case will not be easier. In the trial balance, there will be some more information. In that scenario, you will have to create this account. Okay, fine. So now let's go on to the next question. Now see here, we have this full-fledged final account question from CA Foundation RTP. I don't remember the exact year, but I will let you know afterwards. Okay, so now see here, let's read the question and let's just discuss the relevant part. See, the following are the balances as at 31st March 2021, extracted from the books of Mr. Satyendra. Okay, the balances are given over here. So now the relevant things over here is, the first is bad debts recovered 1,800. What will you do of this? It's really simple. You just have to account this separately. Don't mix this with the provision and all. It's not mixed. It's not related. It's not related with the debtors also. Just take the bad debt recovered as an income, normal income in the profit and loss. In profit and loss account, just take it on the credit side. That's all the treatment is of bad debts recovered. Easy, simple. Let's just finish that. Okay, let's talk about the main point over here, that is the provision and everything, right? So see, in the balances, yeah, this is the trial balance. Here they have been given provision for doubtful debts 12,800. Okay, provision for discount on debtors 5,500. You see, in the trial balance both provisions are maintained from the previous year. Both provision are there, doubtful debts, bad debts also, and discount also. Yeah, both provisions are there. Sundry debtors, okay, and bad debts, right? Creditors are not important for us over here. Bad debts are also there, 4,400. Now let's see what's happening in adjustment. In adjustment, you can see here, create a provision for doubtful debts at 5% and provision for discount on debtors at 2.5%. So we have to maintain the provision also, right? So let's just see the scenario of this question. What kind of scenario is this? In the trial balance, there is debtors balance. Both provision are there, provision for doubtful debt and provision for discount. And in the trial balance, bad debts are also there. Bad debts are also there. And in adjustment, we have to maintain both the provision, 5% and 2.5%. Okay, fine. So how will we solve this? It's really simple. Always remember, in the big question, what you have to do, you have to open the provisions account, the contra asset account, which has a credit balance. Just open them and do the calculation in that. Okay, just do the posting and see. So let's just first create the PDD account. Okay, not discount, provision for doubtful debts, provision for bad debts, right? Whatever you want to call it. So see how I have done this. It's really simple. First, what you do is you take the opening balance. Okay, understand the chronology first. First, you will take the opening balance, by balance B by D, 12,800. How did I get this? From the trial balance. See here, 12,800. Okay, 12,800. And then you have to see the bad debts, if there are any further bad debts and bad debts. In this question, there were bad debts in trial balance. How much? 4,400. Just take that. 4,400. Clear? On the debit side. Why is that so? Because provision for doubtful debts is decreasing because of bad debts. We are writing off the bad debt. Okay, fine. And then what will you do? You will have to take the closing balance. How will you get the closing balance? How did I get this 24,000? It's really simple. What you have to do is you have to calculate the new PDD, provision for doubtful debts. Okay, so it's really simple. This is new provision. Okay, this will go into the balance sheet. But how to calculate this? It's really simple. The question will tell you. The question has told you, see here, create a provision for doubtful debts at how much? At 5%. At 5%. In the trial balance, we had debtors balance is 4,80,000. So on this 4,80,000, you will have to calculate 5%. There are no further bad debts now. There are no further bad debts. So directly you can take 5% of this 4,80,000. Okay. So see here, 4,80,000 into 5%. Will you deduct this bad debt from that 4,80,000? Of course not, because this bad debt is from trial balance. So that is why you will not deduct. It is already deducted. 4,80,000 into 5%. Let's just do that in calculator. 4,80,000 debtors given in trial balance into 0.05, the provision for doubtful debts percentage, that will give you 24,000. This is the new PDD, provision for doubtful debt, you have to maintain, and this will be your closing balance, 24,000. Simple and straightforward. Okay, right. After this, you will have to find out the balancing figure. You can easily do that. See, you just have to see which side is bigger. Sometimes this side can be bigger or this side can be bigger. So now here in this case, this side is bigger. 4,400 plus 24,000, that's equal to 28,400. Write it on both the sides. Minus 12,800, that's equal to 15,600. So 15,600 is the P&L effect. Okay. So by profit and loss account, 15,600. Now cross posting of this will go in the profit and loss account. See here, in profit and loss account, to PDD 15,600. Yeah, see here, profit and loss account. Yeah, PDD account is getting credited because of P&L. So P&L is getting debited because of PDD, profit and loss. Okay, okay, easy. Profit and loss is getting debited because of PDD, provision for doubtful debt. Right. After this, you have to move on to the discount. Okay. So now for discount, the same concept, okay, the same thing. See here, I have just removed this D. Okay, see, provision for discount, opening balance, closing balance. Here mostly there will be profit and loss effect, and then the expense will come over here. Now here the expense is what? In provision for discount, the expense is discount allowed, not bad debts. So you have to see if there are any discount allowed in the question, in the trial balance. No, there aren't any. Is there any discount allowed in the adjustment? No, there is not. So discount allowed will be nil. Discount allowed will be nil. I'm just writing this just to show you. You don't have to write it actually, discount allowed. Okay, just leave it. So by balance B by D, how did I get this? The opening balance, again, same from the trial balance, the same methodology you have to follow. Provision for discount on debtors, that's equal to 5,500. Yeah, so 5,500 will come over here as the opening balance. Now you have to calculate the closing balance, because closing balance will not be given to you in the question. Closing balance is what? How will you calculate? You all know the trick, how to calculate the new provision for discount. The new provision for discount must be calculated on the amount of debtors after deducting the provision for doubtful debts, after deducting the further bad debts if there is any, and after deducting the PDD also. On the good debtors only you will have to calculate the provision for discount. Okay, so that means you have to take the debtors balance. You have to take the debtors balance from the trial balance, that is 4,80,000. From this 4,80,000 you have to deduct this 24,000. What is this 24,000? Provision for doubtful debt. You have to deduct that. 4,80,000 minus 24,000. 4,80,000 minus 24, that's equal to 4,56,000. 4,56,000 will be your debtors balance after bad debts and provision for doubtful debts. Okay, 4,50,000. On this 4,56,000, you have to calculate the discount percentage, that is 2.5, so 0.025, right? Yes, so that's equal to 11,400. 11,400 is your new provision for discount, which you have to maintain. Okay, so that's 11,400. So that's the closing balance to balance C by D. Is that clear? Easy, right? It's not difficult, it's simple. Okay, 11,400. The same sort of concept is there. It's just that little bit difference in calculation is there over here. This is the most critical part. You have to understand this properly. After bad debt, after PDD, whatever amount you get, the debtors amount, on that you have to calculate the percentage of provision for discount. All right, so you get that. Now, as a balancing figure, you have to see the P&L effect the same way. That is, 11,400 is bigger, so 11,400 on both the sides, and 11,400 minus 5,500, that's equal to 5,900. So by profit and loss account, 5,900. This is the balancing figure. Now this will go to profit and loss. You can see in the profit and loss what will happen to provision for discount, 5,900. Clear? And as I said earlier, that bad debts recovered is a simple income. All the accounts and everything related with that, the debtor account is everything closed. So it will be treated just as a simple income and taken to profit and loss. Okay, simple and straightforward. So you understood that. Now what will happen in the balance sheet? Let's just see the balance sheet. Okay, let's just see the balance sheet. See, balance sheet is also really simple. I've already explained to you. In the balance sheet, first you will take the debtors given in trial balance, that is 4,80,000. Yeah, see here, 4,80,000. Where is it? Yeah, 4,80,000. Now from this 4,80,000, you will not deduct this bad debt in the balance sheet. Okay, this 4,400. No, we never do that. Okay, we only deduct the adjustment bad debt, further bad debt. This is not further bad debt. This bad debt is already accounted for. So you will not, account it double. No, you will not do that. So 4,80,000 minus provision you will subtract. Which provision? New provision. Provision for doubtful debt. This 24,000 is there now. This will go to balance sheet. Yeah, it will come over here. 4,80,000 minus 24. That's equal to 4,56,000. From 4,56,000, you will subtract provision for discount. PD, just PD. 11,400. You will get. Yeah, let's just calculate this. 4,56,000 minus 11,400. That's equal to 4,44,600. Is that clear? Simple. You understood this, right? Now let me just show you the solution of the RTP only. See here what they have done. Bad debts recovered, they have taken in the credit side of profit and loss. Yeah, as I told you over here, right? And then see what they have done. In the profit and loss on the debit side, they have taken bad debts over here, which is not a good idea. Why? Because understand, provisions are created. There are provisions in the trial balance. So they are not utilizing the provision to write off the bad debts. They are directly writing off the bad debts through profit and loss. Of course, you can do that if you want. You can do that. There is no restriction. But the proper way would be what? Utilizing the provision. Make use of the provision. right? But the answer will be same only. The result and the ultimate effect will be same only. See, let me just show you. Provision for doubtful debts, they have taken here 11,200 and 4,400. In total, it is how much? 15,600 debit to PNL. In total, the ultimate effect of both of these is what? 15,600 debit to PNL, right? So we are also have done that only now. We also have done that only. Profit and loss debit by 15,600 because of this PDD. In that PDD account, everything has been considered. Yeah, bad debts have been considered, but they are doing it separately. It's fine. Sometimes they do it separately, sometimes they combine. Okay, both the methods are there actually, but the better way is this only. Yeah, this only. Just create the ledger account. Just create this ledger account. See what is the ultimate effect. Just take that ultimate effect to the profit and loss. You will get the full marks only. Fine. Right. So they have done this separately. Okay. And there is little bit shortcut over here. We also have a shortcut. I will just show you the shortcut also. So now see here. Then discount on debtors. Now discount on debtors, the same thing. 5,900. Okay. To provision for discount. Okay. 5,900. See here. To provision for discount. 5,900. Clear? Easy. And in balance sheet, you can see in the balance sheet what they have done. 4,80,000 less provision for doubtful debts they have done. Directly they have done everything together. 35,400. This is also not a good idea. But the ultimate answer is 4,44,600. This is not a good presentation, okay? You have to do it like this only. Which way? This way only. See, 4,80,000 minus PDD, whatever amount you get. Yeah, then subtract the PD, you will get 4,44,600. What the study mat has done, what the RTP has done, they have done it like this. See, 24,000 now. They have calculated everything separately plus 11,400. Yeah, this and this has been added. That's equal to 35,400. So directly 35,400 has been deducted from 4,80,000 and this amount is shown. See here. See here. Where is that? The balance sheet. 4,80,000 minus 35,400. Yeah. So it's not a good idea. Do it separately. Do proper presentation. Okay. Fine. So you can understand that it's really simple now. Easy. Now shortcut. We were talking about the shortcut. See, shortcut is like this. See here. What do you do in shortcut is, in shortcut you take first, you take new, okay, plus expense, okay, new plus expense minus old. This is what you do. Okay. So new means what? The new provision which you have to maintain, that is 24,000. Okay. The calculation, this calculation you have to do 24,000. And then expense is what? 4,400. This shortcut works for every provision, okay, not just bad debts and all. Minus old provision. Old provision was 12,800. Now see, how will you get these details? This you have to calculate. Okay, this you have to calculate. Now this and this you will get from trial balance. Okay, since you are not preparing this now, so like this you will do. Okay, so when you will do this, 24,000 plus 4,400 minus 12,800, that's equal to 15,600. Yeah, 15,600. Clear? So as you can see, here also 15,600, here also 15,600. So this is a shortcut. Let me just write that. Okay, provision shortcut. Okay, what kind of shortcut is it? Why do we use it? We use it to find out how much will go to PNL. How much will go to PNL? Okay, that's the idea, right? Now the same shortcut you can also apply over here also. Okay, here also you can apply. Okay, new provision plus the expense, there is no expense, so directly minus the old provision. 11,400 minus 5,400, that will give you 5,900. Clear? Easy. So I hope you have understood this. It's really simple and straightforward. So I think you have got this. So that's it for this video. Okay, see you in the next video. Bye.